Okay. So we are, just in case, everybody's aware or whatever, I am streaming this to YouTube too. I don't want to catch nobody off guard or anything. I'm just going to put something in chat here. Okay. Alright, so yeah, just got a few things we're going to try to go over to today. This shouldn't be a very long class. It's just some, got a couple stocks we're looking at, and we've got a couple of economic events happening this week that we'd like to point out and just make sure everybody's aware of. Okay. Can y'all hear me okay? Hello? Yeah, there it is. Okay, it's showing up now. It wasn't showing up there for a second. Okay. So the main things, I'll tell you what, let me go ahead and put this one on Discord too as like a follow me screen, because I'll be jumping around a little bit today. No, that's the wrong one. Back. Okay, here we go now. Alright, so a couple of things that we have going on this week is GDP numbers. We have the home stuff like pending home sales, new starts, stuff like that. We have consumer confidence. Now this is one, guys, that we don't think of a lot when we see it on certain economic calendars, but this is an important one, especially at this point in time. Also, another one we don't think of as being able to really move markets a lot is the blank year note auction. So like the 5-year, the 3-year, the 7-year, thing like that. And we have a couple of those happening this week. So let's just do a rundown really quick of some of the big stuff happening this week. We have the goods trade balance happening on the 28th, so that is what, Tuesday. This right here, the S&P CS HPI composite. Those can, if other, like say other factors are kind of coming in the neutral ground, like, it could go this way, it could go that way, then we could look at this as kind of like a rule breaker or a tiebreaker. But other than that, I'm really not going to watch these that closely, because on the same day we also had the consumer confidence and the 5-year note. Those are on Tuesday. Pending home sales is on Wednesday. That's going to be a really big one this week. We also have the mortgage stuff with banks and the way that they're going. This one will be a really interesting one to see how it plays out. Now, any one of these is not going to matter so much, but the fact that all of them are coming out at once is what's going to play the bigger role here. We have crude oil inventories, which is going to be a big thing this week. A lot of the market is propped up on oil right now, and we're kind of seeing this sector exhaustion in energy along with some other factors playing in as we see it pulling back. I know this week, even whenever I seen crude oil or U.S. oil going really good, even some of your big ones like Exxon and stuff was just kind of either middle of the road or actually pulling back. There was one day there where they had a pretty decent day, but overall, I think we might be, unless we just get some type of really big news in, we might have seen some of the height on oil for at least a little bit. Now, we'll see whenever summer comes out how that affects all that, but just talking about for the short term. Heating oil probably has some natural gas stuff. If we look here, all that stuff is coming in on Thursday along with the 7-year note auction. This is going to be a bigger one than the 5. So this one will be really interesting to see what happens here, especially with the way banks and stuff are going. Because remember, it's these type of notes and bonds and stuff like that is what got banks like Silicon Valley in trouble in the first place. So what happened with Silicon Valley was they had put they did what normal banks do, but they did it to a point where it was damaging to their self. So they put their money in things like bonds and these notes, which, if we're looking here, those are like 3, 5, 7 years down the road. Now, if you can hold out for that 3, 5, or 7 years, you get the money that's expected. But what happened with these banks is they started struggling. People found out that they were struggling. There was a run on the bank where people wanted their money. Now, if they bought these at one price and have to sell them at a cheaper price before they've matured, they're going to lose money. And because people was demanding their money right then and there, they had to sell them and get them their money. And that's what started causing these run on the banks. If by some magical fairy that they could have waited out, they would have been okay. And this is the reason why they do stress tests on banks, to make sure they're not putting too much money in these areas in case there's a run on the bank. But that's what kind of started with some of this stuff, and then we kind of started having dominoes fall, things like that. And then the 30th, let me see something. Sorry, I said the 29th is Thursday, right? No. Sorry, 29th is Wednesday. The 30th is Thursday. The 31st is Friday. Sorry about that. And I'll post a picture of this up on Twitter and in the Trading Collective Discord, just so you can have it as a reference. But we have the GDP numbers and PCE numbers coming in on Thursday. Now, this is the final one. These are the final estimates, which means this is what the GDP is coming in at. So up until now, the GDP numbers for this year is what they call estimates. And now we're going to find out, are we in the negative or are we in the positive? Is their numbers been right? What is the final photo finish of it all? What else we got here? Core PCE, I think I mentioned that. PCE, initial jobs claimed. That's about it. Let me see. Sometimes they won't show speakers, so let me look at this other one real quick. Fed bar testimony is on Tuesday at 9 a.m. It looks like he's testifying several days. So he's, did I read that right, or did I just see two of them? Hang on, let me get in here again. Fed Jefferson speech at market close on the 27th. Fed bar testimony starts on Tuesday, March 28th at 9 a.m. Looks like he's also testifying on Wednesday. And then at 11:45 on Thursday, we have Barkin and Waller speech. I'm assuming that this is all because of where we had CPI numbers, the bank stuff, and then GDP coming out this week. So it's probably them explaining their rate decision, what they're doing about the banks, just all this stuff kind of combined. I don't know that I'd actually have to look up to see what they're actually speech about, but that's what I'm assuming. The Michigan inflation numbers, yeah, those will be pretty important. And then on Friday we also have Williams and Cook. So Cook's not until after the market, but Williams will be during market hours at 2:05 p.m. Eastern time. Yeah. Then next week, the ISM PMI numbers will be big, but that's next week. Okay, so whoopity-doo-dah, what's all these numbers mean? Well, the big ones are going to affect the overall markets. SPY, Q, tech, oil, things like that. The really big stuff in the market. But we also have a lot of financial sector stuff going on. I think I already mentioned the energy sector would be important to watch this week. And then I'm also curious about where things is kindly starting to die down in the eyes of the Fed as far as inflation. They believe they're starting to get it under control. That's debatable, but besides the point. I'm curious to see what consumer discretionary does in this area, because even though it's been terrible for the economy, they've made quite a bit of money during this time with things being up as what it is. So will we see a plateau and a sell-off, or are things still going to go strong for them for a short time? Okay. Let me erase some of this stuff. Okay, so what we've seen in the SPY, and I'm sure, guys, anybody that swing trades has seen this before. When you have a run up on a stock, it sells off. It seems to find this support, and it'll trade kind of sideways for a minute and then peak back up. And I'm assuming that's what we're seeing in the SPY right now. We have sold off. We've kindly found this support, and now it's trying to do this breakout. It almost starts off like a kind of like a J shape, comes down and circles back around, comes back up, breaks the 200 and goes up like that. So we see this like U or like reverse J or shape kind of coming in the market. So what I forgot to turn off the drawing tool, sorry. There we go. So I think that overall in the markets, this 375-ish, 376 area is our bottom support. Now we broke below that a time or two, but I think that's kind of what we're expecting. If you remember at the beginning of the year, we assumed that we would probably see another small sell-off back down, almost like a double bottom. We didn't quite get that double bottom, at least not yet. It sold back off to the 370s area and then bounced. But we also retested it again here recently. So if we draw this out, I don't want to go too, let me draw it backwards here. Draw it like that or like that. It don't really matter. We can even put it up here. The point being is get this thing to draw right. We're in this kind of like symmetrical triangle. You could even put this right here if you're the type that don't like to have breakouts below your lines. either way, we're in a symmetrical triangle, and we're looking for that breakout. Now, I think things is kind of overall looking positive. They are some things that could teeter back the other way, and cause us to sell off. But overall, I'm starting to see a more optimistic side to the market, at least until summer. So I'm expecting that we could possibly retest that 420 area and break out. But this week, when the GDP numbers will tell the tale, are we going to retest the 370 area and bounce or break through, or is this going to be a big nothing burger and we just continue on up? So the kind of areas I could see us heading to from here is 420 or higher, or 375 or lower. And almost right here where this point of control is on my chart right now is where I expect that to kind of be the teetering point. So in this situation here, if we break below, let's say 389, 388, then we probably will retest that 375 area. But if we can stay true, make a new higher high, and probably break out of this little area right here, which would have us right around, what is the price of it right now? Yeah, right around the 400 mark. So if we can get over that area, we'll probably go back and retest the 410, the 420, and then above 420, we'll probably make a more stair-stepping, a more positive, bullish market structure going up from there. We'll start to see it kind of doing this number, bouncing off supports, coming up, trending outwards. I don't think we're going to rock it until we really break that 420 area, possibly even around 430, and then we might see a really big pile on from there. But other than that, I think the market is still a little bit skittish, but more on the positive and bullish side of things. Depending on how things go with these banks and GDP numbers, we'll just have to wait and see. But other than those factors, I'm a little bit more bullish on the market overall right now. And just like anything else, when the market does good, more riskier stocks are going to do good. They call that risk on. The market is risk on or risk off. So you're going to start seeing mid caps do better, technology do better, things like that. And of course, the SPY or the Qs is doing good. Apple's going to do good. Amazon sometimes does good, sometimes it follows its own thing. But Amazon is back under 100. I think anybody looking for stocks to hold long term, this would be a good start to start putting some into Amazon. It's below 100. I wouldn't put everything I wanted. Like, say you wanted 100 shares, maybe grab you 15 or 20 shares just to start and see where it goes. Somewhere around that area, 15-20% of what you'd want to put in on it. But Amazon is at a good price right now. Tesla is still kind of back and forth on the 200. I'm not really interested in Tesla right now. It's just not at a good price to go long or short either way. It's kind of like in that middle ground. Microsoft has been banging the last little bit. We've got some healthy market structure here. It's popped up, come back, tested support, what was previous resistance, and broken out again. And if it continues like this, we'll have a clear new higher high and a really good trend upwards. Google is another one that has been doing pretty decent here lately, but we're kind of flagging right now. We need to really break out of this area right here. If it does test this area again and rejects, look for the break of, like on the 4 hour day chart, look for a break of the 9 or the 20 and go short on it back to the 50. Other than that, Google is looking pretty decent, but we're a little overextended on it, I guess is what I'm trying to get out. So that'd be a good one to kind of eyeball and watch. I just want to check. Okay. Now, Walmart is one that we started watching near the end of last week. I think I even seen Real Plays. He's got a good chart of this out on his Twitter. Guys, that's something if you're not paying attention to. Real Plays has a really good Twitter account where he calls out certain charts and areas. But yeah, he's seeing something really good here on it. Let me go out to the week. It'll probably look better. So we're in this flag, this downward kind of flag, and it's pretty much a question of where does it break out on. Up or down? Are we going up from here? Are we going down? Or are we just going to keep trending within this direction? A good place to look at this, if we come back to the 4 hour, is play these trend lines. Okay, if it gets up here, we see a rejection, then go short until the next trend line and keep playing those trend lines until you get a breakout. If it breaks over this, you can either look for the retest, or depending on if there's good volume behind it, play it as soon as it breaks out. That's how I judge breakouts. If there's not a lot of volume behind it, I'll look for the retest and the bounce before I play it. And that just shows me it's not a fake out breakout. There is some structure there. Versus if it doesn't do that and it just comes back below, then I'll play the trend. I'll keep playing the trend lines. That's the way we did with ExxonMobil. It's a really good plan and setup, and it's worth checking out. But yeah, Walmart's one I'll be keeping my eye on to see, can we start trending above the 200, or are we going to reject and come back down? ExxonMobil we talked about. So we was playing this trend. Let's go out to the 4 hour here. So we was playing this trend for a month or two, and we finally broke out, and then it came back up, retested this area right here around 113. It never could fall back up within that upper trend line or even that upper area, and then we sold right off from there, and we kind of peaked back over 100. We made it back up to around 106, and then just kind of fell. And I think what we're going to see from Exxon from here is us kind of trending back down to its normal area. Now, its normal area before all this was around $60 or $70. I don't think we'll quite make it down that far. We'll probably see more of a normal trend of the more higher 80s, lower 90s area. But yeah, that's what I'm kind of looking at with Exxon, is for us to kind of start even its way back out. You can probably play the 200, but I'm guessing it'll probably, especially if we head straight to it, we'll probably play off the 50. We may break above it a little bit, but then just fall right back below it. So that's a good area to kind of look out for, is the 50. If we reject off of it, or if we break above it and then come right below it the next day, that's a good sign of rejection and a way to go short on it. But I don't think we're going for sure down lower until we break that 98.60 level again. Because without that, it's a double bottom. It'll signify to buyers that there is support here and they'll jump in. A break of that will show buyers and sellers, okay, right now is the point to get out. Wells Fargo, just like the rest of the banks, has sold off quite a bit. Here we go. And we have finally broken down into these levels here to where we need to start looking for support in areas. Right now is not a time to go short on Wells Fargo because it is sold off too much. We need some type of relief, pull up, consolidation, something like that before we go short again. So what we want to look for is where is it going to bounce off of with these banks. And I'm assuming it's going to be in this area here, the $33 to $34 area is where I would start looking for that support. Now it's possible we head all the way back down to these lows, the mid to upper 20s, trade sideways a little bit for the bounce, but I would start looking for it around here. That's where it hit resistance before, and that was a major spot when it broke out that it went back up to your $60 levels. With the mortgage and stuff like that coming out, watch those days when it comes to banks. Now it looks like in the after hours there's a lot of type of risk on action going on. Like there's things like the HLBZ, the meme stock, that's going up. Phase, Dave and Buster's, Zev, it's an EV company. Lightning Motors, I think is what it is. GNS, Upstart, Matterhorn, Kohl's, Carnival, Steel. So those mid caps to meme stocks, those where you could start looking for quick in and out top plays. But let's take a look at travel and steel real quick. What is Square doing real quick? For y'all that don't know, Square got some pretty bad news. They I can't remember exactly who it was or for what reason, but there's kind of like an outside company kind of looked in at some of their finances and was like, wow, you know, you guys are in real trouble. Kind of sold them off for a little bit, so damn, that sucks. Let's check out Upstart here. Or not Upstart, sorry, Travel. That's what we was looking at. Now, Travel had a couple of good days last week. Still ain't breaking upwards, though, are we? What about airlines? Kind of in the same boat. What's on the higher priced airlines? Yeah, if you're going to play Travel, you might as well play the bigger companies that have another foot in something else besides Travel, like Boeing or Lockheed Martin, something like that. What's it, LMT, I think? Yeah, see, those are holding up pretty good in a flag. So yeah, that sector is probably not a good one to look at. Steel, we started looking at last week during this little spike up. We drew this little area support here, and it looks like we're holding so far. So I really like Cleveland Cliffs as far as the steel play goes. Their normal range is around 30, give or take. And if we can catch this bounce off of this area on here, which is in between 1715 and 1750, if we catch this bounce right in here, that'll be a nice little double bottom. I would say from there it'd probably definitely go up to the 50s, 50 EMA, and then from there we'll look for the breakout and see if it continues up. But steel, I feel like steel is in a prime position to be watching for a breakout. This could go on a pretty decent run, and I think it's due for one. But this is as long as the market stays risk on and steel continues to do well, or materials sector continues to do well. What was another one we could look at real quick? CCJ, that's materials, right? I can't remember what CCJ is. Uranium. I thought it was some type of materials. Hey man, how's it going?
Going good. Let's listen in.
Yeah, see, this is like the same thing. We've got this little box right here. So maybe materials is a good sector to really watch out for this week. Can't think of the sector that's in right.
Yeah, I mean, shit. As long as I think as long as DXY keeps coming down, then a lot of these like steel, inflation is just gonna go back up.
Yeah.
Because it bodes well for other countries and stuff.
Yeah.
Cheaper dollar, they can export and stuff.
I've been noticing steel and what's the one you like there too? Well, I don't know if you. I'm not saying you like it, but you watch it.
I like X and
yeah.
CLF. Yeah.
And then we also have things like bull, uranium, stuff like that. Are all they're hidden kind of like in these levels where they are really worth trying to check out and watch what they do.
I mean, have you noticed? I know you like gold, GOLD.
Yeah.
I mean, look at those stocks. They're so lagging, like they're diverging, lagging so hard behind gold because gold's at 2K right now, and you look at their 52-week highs, they're nowhere even close.
Right.
Like they have so much catching up to do.
Now
I mean, gold's almost at not all-time highs, but I mean, we're at the 2K level almost on gold, and these guys have barely even moved.
What this is what we was looking at like a week or two ago, right? Gold, when it was pulling back.
Yeah.
See, and
gold just had a crazy breakout ever since the bank shits. Same with Bitcoin too, but
I'd never really played this one until you mentioned it, GLD. And
yeah, those contracts, they move.
Yes.
They move.
That's a really good one. I like that. So yeah, that'd be trying to look for my notebook here so I can write some of this.
I'm actually shorting gold at the moment, kind of crazy, but.
Oh, I get it. Right here where it's
I'm
at.
Shorting the 2K level. Yeah, shorted the 2K level, which is like up. It was close to 86. I think it was 86.10 is when I got in.
Let me grab out a sheet here.
But I was risking 86.40, which is the pre-market high, which was when gold was I think it was like 2K 2010 or something, like $2,010 or something.
Trying to find me
I forget what it was, but that's basically what I was risking till that. But that 2K level is really, really good. Like risk spot for shorts. You just basically cut. It breaks out over it again. But so far, it's just been rejecting that 2K level every time.
Yeah, we ended up when my mom passed away. Ended up with a lot of coins and gold and stuff like that. And I've tried to keep up with some of those prices here recently, and Uh, yeah, gold is at a prime.
Silver is a good one to watch out for.
I
Silver
cannot
too,
find anything. Where's the pencil at?
because there's a lot of in the silver market, especially with silver futures and contracts and stuff like that. There's a lot of manipulation and stuff. You really read into it. These banks and stuff, they're like they really do not want silver and stuff to break out. Like, so they manipulate and they short it and they fake numbers and they make the books look like they have more, or these banks and stuff, they make it look like they have more silver than what they actually have.
GOT, Cleveland Cliffs, CCJ. Okay, so yeah, I got the material sector. I cannot remember. I hear koi pen. This is a cool. They have like a pay for service, but you don't need it. Like, they got like a really good free version of it too. But this is a good place to keep up with sectors in. So I want to turn these off. Put these on. And let's blow it up here and look at it.
I've noticed last week especially, there's a lot of like Walmart, Costco, they all broke out pretty good. And McDonald's, like a bunch of consumer stuff.
Well, I was just telling people last week, I'm like, or at the beginning of last week, I was like, Walmart just, it's kind of been like sucking here lately, like it's pulling back, not really been moving much. And then by the end of the week, it just shot up. I was like, wow, okay.
Yeah. I don't know. I guess with the inflation, because people, the Fed pumps the market again. Freaking Walmart benefits from it. Walmart just benefits from everything. As long as people can shop, Walmart's just doing its thing. Same with McDonald's. Man, McDonald's, I mean, nobody's gonna stop buying McDonald's.
XLB.
That's just human nature.
That's the material sector, XLB. Yeah, check that out. It's kind of starting to find this support right around here. So that'll be one worth checking out. I've not looked at Target in a while. Let's check it out. I'm going to keep that one up. Let's put it right here, Target. Oh yeah, I had a good day Friday, didn't it?
Yeah, man.
Yeah, it's kind of in that flag too, and like it's trending downward here.
Yeah. It's like, channel, whatever.
Oh, come on.
Good old. But yeah, they need to do something here soon. They're going to keep going down, I think. I don't know. They need to break out. Some momentum.
Is there? Wow, yeah.
I know Costco seems like I think went $7 on Friday. It's crazy. That thing has some crazy movement. I guess it is a $400 stock.
I'm going to take a look on this Target, because I like the way that this sold off. Now it's finding support right here. Let's see, cost. Yep. The Silicon Valley Bank, I didn't realize like some of the big players that had in it until I started looking in on it. I seen a report where Etsy had told its sellers that a couple, like, your checks may be a little bit late, but we will get you your money, and it was all due to the Silicon Valley Bank. But they've got Roku, Etsy, like a big bunch of players that was using that as a bank, So I'm curious to see how some of these things fare with some of this rebuilding and stuff going on. See, Roku sold off quite a bit the last little bit. What is that? Yeah, Etsy. Etsy's back down here. So those might be some worth checking out. EV done really good last week, so I could watch those to see if they pull back or continue up. Oh well, looks like they already started pulling back.
I see a lot of people bullish on what's it called? The ticker on
Yeah,
ON.
I like that semiconductors. Yeah.
Like, yeah, I don't know why. I just see a bunch of people bullish on it for some reason. It's kind of.
And look at some of these candles.
I'm
How
not used to
big.
seeing post about it, so I was like, what the hell?
I like this because it's kind of like
See,
within this range like this. Let's go with right here. And you can play this range until it breaks out. But with semiconductors, actually got some pretty decent news here recently.
yeah, they're getting a bunch of. Feels like every year they just get a new like theme, like 2020 it was gaming, 2021, 2022 is Bitcoin.
Yeah.
Not 2022, but 2021 it was Bitcoin. Now it's AI. It's like, what's the next one gonna be? I guess you have EVs too. Yeah, all that stuff. But
See, this come out.
EVs, gaming, Bitcoin, AI, like everything uses chips.
This came out
What
on
is
the
that?
24th. It says shares of several companies in the broader tech sector are trading lower amid St. Louis Fed President Bullard raising his 2023 terminal rate projection and reiterating inflation remains too high. See, it's him and Mester that are like they wanted to do a 50 basis hike this last time. I don't know what the notes came in at yet, but before that, they was the ones talking about doing a 50, but they was the only ones on board for doing that. So
They
he's
want to squash.
yeah.
They want to squash it.
I don't blame him at this point. I mean, it would kind of suck to go back down at this point, but the faster the Fed can pause, the quicker we get things turned around.
Yeah. I think the data. I don't know. Like, I think data is kind of laggy, honestly. I mean, you look at crude, look at natural gas, like all of it's down.
Yeah.
We're down. Crude's down to $66 a barrel. Natural gas is down to COVID lows. Like, I don't know.
Yeah, and that's
I
the
don't know
problem
what
with
could
most
be up.
indicators.
Maybe what, the mortgages and stuff? Is that what's going to be reflecting? Is the mortgages?
I think
Like,
a lot.
as far as energy and stuff, I feel like energy is going to be down as far as that inflation part.
Well, when CPI came in last time, the CPI that includes everything, it was right on par with what they projected it to be. Like it was the exact number that they was expecting. But core CPI.
What was it? I think 6.6, right?
I'd have to look to make sure, but
it's still 6%. Yeah, that's still pretty high, like way higher, because they want 2%.
But their core CPI, the thing that doesn't have gas or mortgages or any of that stuff in it, it actually was higher than what they was expecting it to be. So the stuff that's supposed to be lower, then like that's supposed to be the easy stuff because it doesn't have all the food or utilities or cars or any of that stuff in it. Let's see right here. Let me find. Oh wait, maybe CPI was the week before that. There's PPI.
I'm just curious. I mean, I would love if inflation kept coming down. I really do not want us to enter this stagflation period. That's
okay. Yeah. So CPI year over year, the prior was 6.4. They expected it to be 6, and it came in at 6. But if we look at the month over month, let me find it again right here. Month over month. So on the month over month, it was 0.8. It came in at 0.56, but the core CPI they was expecting it to be .04 and it came in at .05, or sorry, .4 and it came in at .5.
And the prior was .04.
Yeah. So it actually,
Even higher.
yeah.
That's interesting. That's really interesting.
That's
So
me
year on
too.
year, it's going down still, but month on month, it's going up.
Yeah, and on the core too. So that's the stuff that doesn't have gas or food in on it.
Yeah.
So it's like you were saying, like, yeah, gas looks like it's coming down, but it looks like the stuff that wasn't going up is now going up.
Yeah,
But
that's interesting.
you'd kind of hope that with gas and stuff coming down, maybe it would counteract each other, like kind of be, yeah, that might be going up a little bit, but we have everything else coming down. So, but I don't know, man. And I think that's what kind of has a couple of these Fed members on, like, worry watch, like they don't know what the next one's going to be like. But I'm curious to see what these GDP numbers come in this time around.
I mean, I look at like energy like a chain effect. I mean, you can bring energy down. You got like supply. Everything comes down. From trucking, shipping, all that shit.
Yep.
Like,
Especially when it comes
all
to
that comes
airplane,
down.
rail, and boat. Those are your three biggest movers, and those are what uses up the most, like oil and stuff like that.
Yeah, so that's just what I think. Like, that stuff comes down, then those are good, long. Like, I know they lag at first, but over time, it's gonna affect it, make it cheaper.
Yeah.
But who knows?
But that's what I'm hoping it's gonna be.
Did you see the thing about they're saying that what the Fed's doing with the banks isn't technically QE?
Oh yeah, yeah. Technically, we're not bailing them out or anything like that, and
They're
it's
just
not.
yeah. I think that's interesting.
And like they were saying too, like on a couple of them, like we're not using taxpayers' money, which I think is semi a lie, but there's only so much they can do that with one or two banks. After you get like several banks failing, the FDIC is not going to have the money to back that up without some type of taxpayer bailout.
Yeah, I feel like people don't realize how much money these banks are sitting on.
Dude, did you see where the bank that ended up buying out Credit Suisse, when they bought them out, now they own control of over $4 trillion in assets.
Yeah, it's crazy. That's why they had to bail it out, because I was trying to tell people when it was failing or whatever, I was like, you can't let Credit Suisse fail.
I mean, that's a millions.
It's like trillion.
Yeah.
Trillions, man.
Trillions
in assets, you can't let that shit go down.
Trillion, $4 trillion. And think about that, a trillion is a million millions.
Yeah, that's just like,
right.
Like there is a reason they call it like too big to fail. It's because the system, they won't let them fail because they'll just pump them with unlimited money fiat.
It just blows.
That's the thing about
my mind.
fiat is it's paper and you print it as much as you want. But that's why gold and stuff's going up, because gold and silver and Bitcoin. I mean, people don't understand why Bitcoin and stuff's going up. They don't realize that Bitcoin is literally made for this type of stuff, the financial collapse for because Satoshi, he literally told us like fiat is a printer. That's why Bitcoin only has 21 million coins. Like it doesn't have an infinite supply. It only has so many. So
right, it's finite.
Yeah, you can't make more Bitcoin. You can only mine so much Bitcoin. You can't keep printing it like all the fiat and stuff. And gold, I mean, I don't knock on gold and silver or whatever, because I mean, obviously that's really, if you want to have risk off or whatever, you invest in gold. But like, there's so much gold in the world. I mean, yeah, we haven't mined it yet, but there's actually so much gold that we can mine. Crazy.
Oh yeah,
There's only 21 million Bitcoin, but there's millions of ounces of gold that can still be mined.
Yeah, they say if you take all the gold that's ever been mined, it would fill up about an Olympic swimming pool. So that's not even a fraction of what could be mined.
Yeah. I forget what's
also
the
own-
biggest one, Vale or whatever. Vale is a huge, or Brazil. I mean, Brazil has a huge amount of gold.
Yeah.
That's the much.
Yep.
Well, doesn't America have like a bunch of liquid gold under Alaska that we were gonna mine?
It's Alaska coming down into like Washington and Oregon and that area is like one big sheet of gold and oil.
That's
Like
wild.
it's just unbelievable.
Two
the
money
resources.
makers.
That's the reason why America got so powerful is the way. Well, we own so much land, but it's the type of land that we own. It's good for agriculture. It's good for mining. It's good for timber. I mean, it's just so many resources. We don't have to kind of sparse out and trade for resources. We have everything here, pretty much everything but uranium. You know.
And oil.
Yeah. If we could mine oil like we wanted to, we would be like one of the what is it, second or third? I think it's third richest oil producer in the world. But because you have like the Middle East conglomerate in that area, and then Russia, and they have less restrictions on oil doing it, they are like the biggest producers of it. Like they say, under like Moscow and the Kremlin and everything is like a big ocean of oil. And America falls like third to that, but we have so many restrictions on where we can mine and drill for this stuff. I know it was like a big thing here in Virginia. They had talked about, so they have this thing like where they can kind of like drill in sideways. So they used to use it for like, let's say me and you own land right beside each other, and the oil is right underneath my land, and I didn't want to sell my oil rights. Well, then they would go to you and say, hey, we'll give it to you because we can drill sideways a little bit and go down to that oil from your property. And that's how they do it. So that was a big thing around here is natural gas, though, and propane. But they decided to do that underneath the capital of Virginia, Richmond. And that caused like a big upheaval. And I was thinking to myself, well, why not? You know, I mean, yeah, you could argue about fracking and damaging water, but you could limit that. When it comes to just getting out the gas itself, that's no harmful than anything else until you start fracking and stuff like that. I mean, you might have waste that you might have to deal with. But yeah, that caused like this big upheaval about what to do, and everybody was mad and going off, and I don't know, it just seems like a place hurting for jobs and money. That wouldn't be a problem. But alright guys, I believe that's about everything I wanted to touch on. Trying to think if there's anything else. Yeah, I believe that's it. I'll be here Monday morning. If y'all want to come and trade with me, that'd be great. Come and hang out with me. If not, we'll see y'all next Sunday. But we'll be here Monday through Friday. This week coming, come and trade with us, come and hang out with us, and we'll see you then.
Thanks, dude.
Peace out, brother.
Awesome. Thank you, Zero. I appreciate it, man.
Hey, anytime, man. I'm glad y'all come and hang out.
Yes, sir. Y'all have a good night.
You too, buddy. Alright, you do. If you appreciate what I do here, hit that like and subscribe button, and we do this every Sunday. We do the market outlook. Come back and join us. Also, sometimes on Wednesday, I'll usually post before we do it, but we usually have a class. Sometimes every Wednesday, sometimes every other Wednesday, and we just go over basic things. You know, we do last one was volume profile, The one before that was price structure. Just a little bit of everything. From EMA lines to support and resistance. When to exit and enter a trade. But hit that like and subscribe button and hit us up next time. Peace.